Today, I would like to cover a small cap value pharma company known as Endo Pharmaceuticals, which has a long term huge potential as well as recently breaking. This company used to be a $97 company in 2015 and now a $5 company. What happened, we will see, and why it's breaking now. And I have known this company for more than 5 years, but this has been trading actively recently. First of all, disclaimer, this is not an advice and trade research at your own risk. Research at your own risk and trade at your own risk. Let me show my transactions in Endo Pharmaceuticals. So this is my Robinhood account, and if you look at my Endo history, so October 6th this year, so just 2-3 weeks back, I started actively trading. Bought at 100 shares, $3.84, 100 shares, $4, and another 100 shares, $4.10, $4.41, $4.47. Okay, not only buying the stocks, now I hold around 1,100 stocks, and within last 2 weeks the return is 25%. But this is not really actual return. So if you look at here, so for example, I have 15 contracts, and then if I look at one of the contract, a $10 call expiring on April 16th. So even though I have 1,000 stocks, I don't keep any stocks. Immediately I take a profit out of them by selling contracts out of the stock. So if you look at this particular trade, so I bought at $3.80 and I sold options at 50 cents. So basically 15% of what I bought price, and immediately now it's ending in April, but the price is right now $2. So I can buy back and make $100 profit on this transaction. So if you include option profit, so my effective profit on NOP has been 42% close to in last 2 weeks, and that is why I want to cover this stock. I want to show why it is breaking, what is the value of the company over a long period of time, what is the history behind this company. Okay, so the best way to trade NOP is, as you can see here, it is 21% ratings of 14 analysts are covering the stock. Recent acquisitions have significantly diversified Endo portfolio, and bears are saying little exposure to the international markets. Okay, and if you look at their quarter results, almost in last 5 quarters, they beat their quarter. So last time it was 60 cents, they went to 95 cents per share, and it was 30 cents, they showed 60 cents profit, 60 cents earnings. So our next quarter results is November 15th. So you got to be tactical about how you trade this stock around November 15th. So as you can see here, I sold everything. So which basically all my options are sold, and I make extra premium on these things. So almost I can make all this as a profit on my calls. For example, it's $4 call, I sold it, and then I lost profit, but still that's okay. I made some commission on this one. So technically the best way to safeguard yourself is buy some puts also. So as you can see here, I have 3 puts at $4. I also have a $3 put, two contracts, and I bought them at 55 cents already. I can buy back at 40 cents. So I made profit on this also. So on cumulative 2 weeks, 40% is not bad. So this is how you trade. So you don't take too much risk. When you buy the stock, I usually sell the calls. After some time it goes up, and I also buy at the puts. So by buying puts, by selling puts, and by selling calls, you are averaging it. So even the stock drops by any chance, you are still making profit and you are getting extra premium. Okay, so let me talk about this company. Okay, so let me show Endo International. So this is, as I was telling you, I research. Before I research, I research in multiple websites to see what's going on, how they are analysts covering it. So my favorite is Tip Ranks and Stockopedia. You can look at it. So Tip Ranks is rating 9. Stockopedia is rated 92. 100 is highest. Market rate upgraded recently. Long and buy. Bar chart is buy. CFRA is hold. Okay. So let me show, for example, one of this sites ranking. So if you look at um, if you look at 3D Ameritrade, okay. So let me show you in Stockopedia first. So I was selling, stock rank is 92. So Endo Pharma is 101.3 billion dollar company. Enterprise value is close to $8 billion. Its revenue is $3 billion. So their market cap is less than their revenue. That's why they have the lowest PE ratio. And you can see the relative strength momentum in last 1 month, 3 months, 6 months. Okay, so I like this website, and usually if they really rate above 90, that is a good sign. And it has been the most important thing. The way the rating happens is it's up for 20 times. So it hit like 52-week highs in last 30 days. So that is really good news because it's going up. Okay, so you can see rest of the page. I'm not going to rest of the page, but the overall 15 brokers are covering, and it's in a hold. But by the time stock goes up $6, $7, $8, then they'll upgrade it. By the time it's too late. Okay, so I bought Neo stock at $3 last year. Now, recently, JP Morgan and Goldman Sachs upgraded the stock when it was $22. Now it is $27 or $28. So by the time big analysts actually cover the stock, it is already up big time. So which means you lost it. So the best way to get these best returns on this small cap growth stocks is to buy before these analysts convert this from hold to buy to strong buy. Okay, that is my strategy. Okay, let's go through Endo company. So this is their website. You can see this is based in Endo International. This is based in Ireland, but they are located in multiple countries. So they are basically right now 4 companies. Primarily Endo Pharma is the basically parent company, and they bought these 3 companies over a period of time. Pharmaceuticals, Endo Aesthetics, Palladian Labs. So one is located in Pennsylvania, one is located in California, and Endo Pharma is basically a branded pharmaceuticals and generic products. And PAR is a injectable products. They have a huge growing market in this one. And also Endo Aesthetics is also aesthetic artistry. And Palladian Labs is based in Canada, and also it's a generic pharma in Canada market. Okay, so you can go through, you can see investors and media, and then you can see financial information, corporate governance, and you can also see if you go to financial information, you will see all the quarter earnings, and then also who is, if you look at analyst coverage, 15 analysts are covering. Okay, so let's go dig into details, deep details about the stock. Okay, before digging into details, I want to show the recent news. So Endo Pharmaceuticals. Okay, let me dig into the details. Go to TD Ameritrade. So you can read here. This is a diversified small cap pharma company, and they have a lot of FDA approvals, and they already make ton of money. As I can show, the revenue is $3 billion. Okay, so now on price to sales ratio is 0.5, and price to cash flow is 2.76, which is really value company. Okay, so as you can see here, okay, so 80%, close to 80% is held by institutions, which is a really good sign. And cash and short-term investments has been growing up, and total revenue is kind of this is why the stock fell down, is kind of went down. So that's why the stock used to be like $90 a year. So it's now in, this is the revenue, $3 billion revenue. Now it is $5 and it's the same $3 billion revenue. Okay. So we will see what are the other details of this company. Okay. So if you look at earnings, so now, as I said, November 5th is their quarter results, and then between difference between the consensus and the actual on August 15th was 50%. So they were able to beat the record by almost 48%. Okay. So now look at peer comparison. So they compete in a lot of areas with the different companies, as you can see here. So it's $1.3 billion company. So beta is 1.6 and total revenue is $3 billion. Profit margin is minus 2.49, and then revenue growth is 1.7. Okay. So now good part is, let us look at some news. So recently, the reason why it is breaking is basically it got a couple of FDA approvals for a couple of its, as you can see recently, FDA approval for sulfate, ephedrine sulfate injection, and also it bought a company. Yep. So it is bought company called Biospecific Technologies. Okay. So it bought company for $88 in cash. So if you look at Biospecific Technologies, so it's a $650 million company. So the stock went from 55 to $85 overnight. So they just paid like a change for $650 million, not in stock, but in hard cash. So imagine how much cash rich they are, how much cash positive they are. Okay. Okay. That's what it is. So instead of four companies now, it's going to be fifth company. That's why we are expecting next, if not this quarter, next quarter really going to be very good quarter with beating analyst expectations. Okay. So let's look at analyst reports. Overall, nothing great yet, as I was telling. By the time analyst everybody says positive, stock will be up. Okay. So my favorite is always been, so recently Market Edge has upgraded. You can look at Market Edge opinion. So these guys early and upgrade the stock, and since they upgrade the stock, it almost went up quite a bit. So October 10th, that is when it's been, October 5th, it's been breaking, and as you can see here, it's went up from $4 to $6. Okay. So let us look at CFRA report, and before that I want to show you. Okay, let's look at CFRA report. Okay, as I said, as per CFRA, the recommendation is hold, and if you closely look at 2015, 2016, 2017, 2015, okay, it hit stock price of $95 here. Okay, now it fell down. It traded at $3 to $4 for almost more than a year, and now it is breaking. Okay, so why it fell down from $90 and it went to $4, $3, and why it's going up? That is the reason I want to show. Okay, what it is. Okay, so the risk assessment is high. That's what I want to mention. The reason being is a high risk associated with its largest debit and then government litigation. Okay, that is the reason why they are giving. And then, but this is offset by potential FDA approval of a breakthrough in a cellulite drug. Okay, so let us see. Okay, so if you look at here, okay, so quarter two revenue, last quarter they made around 688 million. Okay, down 2%. Okay, So that's why last quarter the stock price, as soon as the result, it went down a little bit, but it came back immediately. But the consensus was better than expected, 31% year-over growth. Okay, that high debit is a concern, quarter to line decline. Okay, so the major catalyst for drop in the stock price over these periods is because they were part of countrywide opioid lawsuits. Okay, mixed view amid ongoing opioid and generic price fixing and related lawsuits. So almost a lot of states have filed lawsuits against this company, and that particular opioid drug division, they almost spent $3 billion, and almost all the lawsuits, they are coming to an end. And then I think some of the states are already settled, and some more states are settling, and that is why the momentum of the stock is there. And other companies, they have been buying, so the overall revenue from those companies going up. And since these lawsuits are going down, that's the reason why the stock is breaking. Okay, so this is, you can look at it and corporate overview and all the different drugs, and then how the injectable market is, mergers and acquisitions, and all the lawsuits they are going through. Okay, so it is a high risk, high potential pharma company over a long period of time. Okay, so they make a lot of settlements, as you can see, but at the same time, so it did not go to less than $3 or $4. So the maximum loss is not going to be bankrupt, but at the same time, if it goes up, going to go up really. Imagine if it goes to go up to like 10, 20, 30, 40, $50 in next couple of years. We are talking about 10x, 20x, 30x, 40x, 90x. Okay, so the best way to play around with a minimum risk is the way I have been doing. Okay, so buy stock, sell options, sell puts, so get the premium from there. So you are reducing risk by 20% right there. Okay, so wait for November 5th results and act accordingly. So this I did a lot of research on this company. I hope you liked it. Let me know what your comments are. Not only this, my aim is to cover high potential growth stocks over a period of long term and hang on to them, buy them for a long period of time. So you can see a couple of my videos: Smile Direct, Natalie's for Peloton, and how I generate like 22K premium for October on electric vehicle stocks. So you will get an idea what I'm trying to cover. Okay, and as I can show you, I am trying to be very fair and show my transactions. At the same time, showing only if I make at least 20% profit, and then if I see this really going up, then only I usually create a video on that, so that I can share my knowledge and I can get feedback. I hope you like this video. If you like, please subscribe and click like button on this video. See you guys soon.